Recording is on. Welcome. Glad you're here. Glad you made it. You made it this far. You're in the home stretch. By the way, are any of you coming tomorrow night, 6 p.m. Toastmasters? Just wanted to quick straw poll. Anybody be on campus? No takers.
We need a Grand Rapids version,
Yeah, probably do.
selfishly, but I think there's a lot of people in GR who would benefit from it, including all the
Yes,
pharmacy students.
exactly. Makes sense. All right, Logan, if you could camera on, I don't know if you have
Yeah,
one.
I'm trying and for some reason it's just blank right now.
Is the camera covered on your laptop? That sometimes slides over.
I don't it's saying that it's working, but
Yeah,
internet.
sometimes there's a little switch that's right next to the camera for
Oh,
privacy, like a
Yeah,
switch.
I can
did it work?
close mine, open mine. Yep,
That's
Did
what
it-
I usually do wrong.
Wait, did it work?
No.
not yet.
Video and effects settings.
Technology strikes again. Hi, Aubrey. Welcome.
Hi.
Yeah, we're doing the straw poll for Toastmasters tomorrow night. But we're actually going to be switching to Thursday nights from Tuesdays. At least that's what the survey said. We took it. So, all right. Glad you're here. I'm here to answer questions, and I'll provide any input I can. There are 29 questions on the exam. I can go over topics in a few minutes, but I want to jump into your questions first and see what's on your mind. Anything on your mind?
So I made a note on my study guide when I went through it. I wasn't sure about creating a classified balance sheet using an adjusted trial balance. Like both of those things separately make sense. And then together, I wasn't quite sure what if that's just a multi-step process, like make all the adjustments and then make the classified balance sheet, or if I was missing something else in that kind of two-step
I don't think you're
question.
missing anything. It's a
Okay.
natural process, and I will go ahead and I will do a whiteboard on screen. Yeah, let's get that going. Whiteboard coming up. Whiteboard. Okay. So if we have we'll start with a trial balance. And then we'll have a column for adjustments. And then we'll have the adjusted trial balance. I just lost it. I'll get it back, I promise. All right. So if we're looking at what goes on, let's turn off it. Come on. Okay. I haven't done this long enough. Why did I lose my panel? Apologize. Okay, we'll do this one more time. Okay. So if we're looking at, so we might have cash, we might have AR, we might have inventory, we might have equipment, accumulated depreciation equipment. Spell right. So if you're looking at these and you say, I've got a balance here of 20K, and then I've got receivables of 5K. The only thing to prepare let's get inventory of 10K, equipment of 20K, or 20K. And we'll have accumulated depreciation, which will offset it, let's say 5K. So a classified balance sheet is just classifying current assets, non-current assets, current liabilities, non-current liabilities, equity. So the classified balance sheet is just, you're going to take the numbers off the adjusted trial balance. When all is said and done, maybe you have a adjustment to receivables, an adjustment to revenue. And at the end, you're going to have whatever is in the last column, and that's going to be producing your maybe we had an adjustment that raised this to 8K. And then we had no adjustments to inventory, 10K. So if I asked you what were the current assets of this balance sheet, what would you tell me?
So cash, inventory, probably accounts receivable, right? Those would be short term.
1 year operating cycle, whichever is longer, and most time the year is longer. And those are the only things. The current assets, you're right, we have the 38. Non-current assets, we'd have a net of 15. And then you go in the income statement. The other thing is the multi-step income statement you want to know about. You're gonna have the revenue minus what equals gross profit? Anybody?
Your cost of goods sold.
By the COGS, cost of product sold, cost of goods sold. Now, the other thing is you can have rent, less sales discounts, less sales returns allowances to get to net sales. Net sales is that magic number. Because a sales discount is only applied to the terms code, the cash discounts, 210, net 30, 15, net 15, whatever, net 30, whatever it might be. The returns and allowances, which some people would call it an allowance, a discount, but it's not in accounting terms. So an allowance is when you return something and they give you a credit. Maybe, or you keep it and they give you a credit. You know, I was talking about in class, you get the refrigerator delivered with a scratch on it. And that's on the side, no big deal. You give me $300 credit on it, great, I'll take it. I'll go shopping with it, do what I want with it. That's not a discount, that is an allowance. It falls under returns and allowances. And that net sales is the 100% number that we look for. So you're going to need a multi-step income statement, classified balance sheet, and I'm going to ask you to prepare both an income statement and a balance sheet. Good kickoff question. Thank you.
Yeah, thank you. That was helpful.
Good. Other questions?
All right, I've got one more.
Go for it.
No
At
one
your
else is
service.
ready. The one I feel like I went back and forth on for the cost of goods sold is sales person salaries. Is there a distinguishing feature where like commissions are part of COGS, but salaries are not, or if they're salespeople specifically that those are part of COGS? I don't know if I was missing some detail in there or if I just misremember that I got a question wrong about that.
Well, let's talk about SG&A. Let's talk about income statement, multi-step income statement. Okay. And we'll start with things like revenue minus cost of goods sold equals gross profit minus SG&A. And we'll basically have equals operating income, and then we have other stuff, technical term, and we'll have net income. And this could be a plus or a minus. We can sell a division, we can have a gain, we can have losses, but we can do a plus or a minus on that stuff. All right, so there's a multi-step income statement. Now you asked the question, sales commissions, that sounds like cost of goods sold almost. Or sales salaries, almost sounds like cost of goods sold, kind of, sort of, but it ain't. All the sales stuff, anybody know what SG&A stands for? I actually asked it in my last class live. Anybody recall? So if you look at the annual reports, we actually pull that up in class. It often will say SG&A as other types of administrative expenses. That's selling. So there's your commissions. There's your salaries. There's your advertising. So that's not part of your cost of goods sold. The cost of goods sold is the actual products. It could include labor in the products. It could include overhead. When you take managerial accounting, you'll see that inventory can actually include materials, labor, and overhead on their assets in the balance sheet. You say, that feels kind of funny. And it is. It's kind of strange, but you can inventory labor. You can inventory overhead. But,
So like if I bought a product and then finished it myself and then sold it, that finishing would be preparing it for sale.
right.
Okay.
So if you got raw furniture, if you're a car maker, great. I bought an engine, great. I got some labor going in to put the engine in. I got some other materials. You got the seat covers, radios, batteries, tires, and then I got the labor associated. And then I have an overhead allocation. Part of my overhead for the factory floor is going to get allocated to those items, the cars or vehicles. So yes, if you bought furniture unfinished and you finished it, you're going to be putting labor into it, and then you're going to sit on the floor. It'll be an inventory with labor, with overhead as part of that. That's part of more managerial that you'll get to, but yes, the inventory is what we're worried about. The things you buy, the materials you put into it. Raw materials, work in process, finished goods. Those are all elements of asset called inventory. You want to go for 3, Jackie? You're doing great.
That was all my
Anybody else?
notes on my questions. Thank you.
We're good. Trenton? Anything on your mind, Macy? Lindsay, you guys are in sponge mode. Let's absorb all this good stuff.
So I don't know if it's like it's more not an exact question, but it's more of like I'm having issues with kind of it's through chapter 8. You know how we went through like the questions on chapter 8 on like the 10 concepts or whatever for the homework?
You give me some examples. And you can go to your homework if you want to talk about it.
Yeah, I was trying to find it, but it won't just like directly let me pull it up. Is the thing.
Okay.
I was having issues finding it, but it was
Okay.
like
Why
the
don't we go-
examples of
Let's go to
trying
the
to-
textbook and talk about some of the topics.
yes, yeah.
So I'm going to go into Connect. I'm going to jump into the textbook. And you can do this from Canvas as well, obviously. If my computer will catch up with me, I'll be able to log in. And I love my touchscreen. And we'll go down to the Launch ebook. And then you wanted to go into chapter 8, Cash Fraud Internal Control. Okay. I like the multiple choice quiz here. And by the way, I'm encouraging you to do all the multiple choice quizzes you can.
I can only see the whiteboard. I don't know if it's
Oh, you can't see, you only see the whiteboard. So let me stop that share.
or if it's me.
I apologize. Okay, so let me reshare. Go into my. Okay. So I'm in now you should be able to see the textbook. Table of contents. You see that? Okay. So we're going down to chapter 8. By the way, some of the things you're going to want to also know about are bank reconciliations. You're going to want to know about internal controls. You're gonna want to know about the petty cash fund. So the concepts that go with that. Like I say, the multiple choice quiz, each chapter has one. Wouldn't hurt to take it. And some quick study or exercises are good. Key terms are good. I'd encourage you to use Sharpen or actually come on out off mute. Come on live. And how many of you are actually using Sharpen? Anybody
Use it frequently.
use it frequently? What do you use most of it?
All of it, really. And
Mm,
I use the quizzes and flashcards.
Finding it helpful? Finding it useful?
Yeah.
Is anybody else using it?
I do. I do a lot of the quizzes like that it'll generate for you.
Yep, excellent. Anybody playing with the study and learn mode in ChatGPT or Gemini?
Yeah, I use the chat GPT, especially for like the key terms, and then I'll put in like numbers and stuff, and I'll have them give me, certain like scenarios that I can use it with when or just like setting up like the multi-step income statement and stuff like that.
Super, super.
I
Okay,
do too.
excellent. So Lindsay, anything in particular in chapter 8 you want to take a look at?
No, nothing in particular. I think I was just getting, I don't know,
Yeah.
getting tripped up with like it's more like of like the number examples is what I'm getting tripped up with.
Numbers for
thought-
what? For-
I think it's I gotta find the example. I'm searching for it, but I can't
Take
find
your
it.
time. No problem.
I did think,
Lindsay?
and maybe Lindsay, this isn't what you're asking about, but the banking activities as controls, I think there were some confusing definitions in there where I wasn't sure what, just like the way things were named was very confusing to me. So I don't know if that was the question you were asking. I guess not, if it was about numbers. Like I felt like I was reading them every time in order to know, okay, this name of this thing means this thing. And they had like some logic behind them, but is that a control versus is that like a standard or a practice? I don't know if that was what was confusing.
Be aware of internal controls like pre-numbered forms. Where does that fall in? Or segregation of duties, or technology controls, or there's all kinds of a variety of controls that you want to be aware of.
Yeah, there was one example on the homework that was for this week that was about internal controls, and I forget if it was the bite-sized case, maybe one of them, but it came back to this chapter 8 material because it was about really one person being in charge of counting the cash and recording the cash receipts when the people who had handed her the cash hadn't also counted it.
Yep.
The worst thing about that case wasn't the right answer, but it wasn't one of the options. Where I was like, no, this step is the dangerous step where this lady has all the money and no one knows how much they handed her, and then she's the one who counts it and records it. And
Definitely a lack of internal. That's definitely lacking.
yeah, so at least I think that was a good review. I don't know, that one might have been due on Thursday because I was trying to work ahead before I really started studying, but I think that reminded me back to this chapter too. And that's maybe, I guess, if I have one other question, and Lindsay, you can just wave at me if I need to stop talking. I'm sorry. This looks like you're looking for something. The exam is not cumulative, but the content is cumulative, right? So like adjustments were on the first exam, and we'll still need to know how to do that, but kind of detail, like
You'll need that for the final,
right.
because the final is cumulative. But you're right. This is only the chapters as listed of that will be assigned. But you still need to understand journal entries.
Right.
Be able to accomplish those. Be able to understand inventory. What happens if you overstate inventory or understate the cost of goods sold? Those kind of things as well. So you want to know impact, understand how that fits together. I think I already mentioned the bank rec, sales discounts, purchase discounts, the impact, what accounts get hit, like inventory or sales discounts or receivables, or just how to handle those in a journal entry format. Maybe what is a voucher? If you want to make sure to look that one up. Be aware of what vouchers are. How to write a check, what is included on a check. Actually, when I surveyed my class, one of my students had never written a check, which is fine. But as you understand, anybody over 40 or 30 or 25 probably has multiple checks, hopefully. And then lower
Kids in
cost of
school, you
market.
write checks.
LCM, lower of cost of market's a good concept to have some understanding of on the inventory front. And then FIFO, LIFO, what happens with rising prices or falling prices? Who gets more profits? Who gets less profits? So those are all the kind of things that you want to be aware of.
You reminded me of one more. Net method was on the study guide, but gross method was not. Is that that net method is more common, and so that's the one to focus on, or should we be able to do both?
Actually, the gross method, so you're talking about for discounts where you're
Yes.
recording, if the terms are 210 net 30, you record the $100 sale at $100, then they take $98 of what you get. That's the gross method. The net method, which is, you're right, is more common because people are going to take advantage of the discounts. You recorded 98. You just need to worry about the gross method here
Okay.
for most of my exams. But I appreciate the question that you understand both. So there are tricks that folks do once they get going, and that's when you operate. That's kind of, and that's more. And I could justify it with Gap saying, well, I'm not going to get $100. I'm only going to get 98. Why should I record $100 sale? Because the logic is, chances are you want to be conservative on the revenues, conservative on net income, be overstating the expenses, and then the assets you want to understate. Again, conservatism is alive and well.
Right.
So could you do like a couple just like example problems of like the LIFO and FIFO? Just because sometimes I get like mixed up um when it comes to that. Just obviously first in, first out, last in, first out. But
Sure.
like when it comes to just like actually like plugging it in like the numbers and stuff like that, it like confuses me a little bit.
Okay, happy to do so. Let's go ahead, stop this share and go back to the whiteboard. All right. So let's do a couple of examples of inventory. And yeah, inventory is real confusing. It's not something that's natural. It's not something you've probably ever done in your life. LIFO, FIFO is, you may have heard of it, but you never tried it. Okay, so we're going to have beginning inventory. And say we have 10 units at $20 a unit. And I'll just get some totals here for convenience. I have purchases. I have 5 units at 15, which comes out to what? Any takers?
75.
You bet. Yeah, let's do some more purchases. We're having fun with this. We'll do 20 units at you know what, I'm gonna rearrange this a little bit. Let's try this instead. I'm gonna make that 20. I'm gonna price is rising. So 25, 5 times 25 is what?
125.
All goes well, well said. And then we'll have 20 units at $30 a unit. And that comes out to and takers.
600.
You got it. Okay. So goods available for sale. Okay, how many units? Somebody else, Macy, Lindsay, come on down.
35.
You got it. And what's the total cost?
$925.
Thank you. Okay. Now, if we were perpetual, it would matter the dates that I sold this to. So if I say, well, beginning inventory on 3/1, next one, and then I'm going to purchased on 3/7 slash X1. And oops, purchase on 3/15.
You said perpetual for like the dates, right?
In this example, I'm going to use, it doesn't matter perpetual or periodic, because I'm going to put my sales on March 20th.
Okay.
But you're right, it would matter because if I had sales on March 3rd, I sold 5 units. Well, that's $20 units on LIFO or FIFO at this point. On March 7th, on March 8th rather, if I sold another 5 units, LIFO would be I sold the $25 units. FIFO would be I sold the $20 units. But I'm going to sell them all on March 20th. And we sell of the 35, we're going to sell 20 of these things. So we're going to go through and say, well, what's FIFO, LIFO, and average cost? There's only two things that can happen. You either, and then that a little bit. It's either sold or it's still here. So I got to come up with 35 units available for sale. And how many did I say I sold?
$20.
20,
I sold 20 units. That means how much is left in inventory?
15.
Better be right. All right. So if we look at that, we say, okay, on a FIFO basis, did I sell the $20 units or the $30 units? First in, first out.
20.
All the $20 units. How many of those did I sell? Well, in this case, I sold 20 units. I sold all 10 of those. So I sold $200 worth of those. I sold all 5. Okay, so this is my 200 or 20 times 10. 10 at 20 equals 200. And I'm going to actually do the layers here, layer that down further. And then go back here and I say, cool. I also, how many of the March 7 units did I sell?
All of
5.
them.
All of them, you bet. 5 times that, how much is that? 25. And finally, how many of the, oh, 25. And finally, how many of the, I don't want a bulldog at 25. Why is it doing that? Okay. And then finally, how many of the $30 units did I sell?
5.
And so that equals 125. And this equals what?
150.
For a total of
475.
475.
So we're going to get a total of 475. Now, I can do one of two things to calculate the inventory value. I can either go in and say, you know what? I can go in and say, well, my inventory, I've got how many left? 15 units at what price?
30.
30.
Which totals what?
450.
And what's 450 plus 475 equal?
925.
Ding, ding, ding. 925. It's either sold or still here. So a LIFO, we just do backwards. We're going to say, oh, I got 30 of these. I'm sorry, I sold 20 of these at 30, which is
600.
600. And what do I have left? Well, what I have left is my 200 and the one I got these are the 15 that are left. Now I can do a quick presto change. What's 925 minus 600?
325.
It sure is. So I can just do the math, but if I want to double check it, I'd say, oh, what's left is 5 at 25 and 10 at 20, which is 125 plus 200, which is 325. Now you notice with a period of rising prices, which had more profit? So if I say I sold 20, I sold these at 20 bucks a piece. Okay. So what was my revenue? It was 20 times 400.
800.
800.
Thank you. So my profit so far is 800 minus 450 on a FIFO basis, which gives me 350. Or I have a profit of, I'm sorry, I'm looking at inventory. 475 from 800. That would give me 3.25. What's that? Calculate. Versus 800 minus 600, which is 200. So I have a 3.25 profit, gross profit with FIFO. I've got a 200 gross profit with LIFO. Does that make sense?
Yeah.
And how would we do average cost? Let's actually do that. I like that idea. So how do we do average cost? Well, what's my cost per unit? Dollars divided by units. So what's my total number of dollars and total number of units?
925 and 35.
Somebody have a calculator handy? And actually, insert result. Let's see if that works.
26.43.
Thank you. 26.4. We'll do with that. So I look at this, I say, okay, is it going to be closer to the 30 or closer to the 20 for my 25? And logically, it's got to be between 25 and 30 because I'm heavily weighted. I got 20 of these at the more expensive. I only have 10 of these at the lower end. So it's got to be over 25. I know that. I'm not taking an average of the 20, the 25, and the 30 because that obviously would be an average of 25, but that'd be wrong. I need a weighted average. So now I'm going to take my average cost here, and I'm going to go ahead and say, I'm going to take my 2643. 26.43. And how many units did I sell?
20.
And then if I want to go and take one step further, I'm going to go 26.43 times how many for my left in inventory?
15.
All goes well. And if you take those numbers out, there's going to be a rounding error, but they should total 925 as well. And that's going to be between 475 and 600 for cost of goods, between 450 and 325 for inventory. And my gross profit is going to be between the two. So that's where average cost kicks in. Does that help a little bit in clarifying?
Yeah.
No.
Yeah, it helps a lot.
Good.
The average cost calculation was what I was most confused about, I think.
Okay, that's fair. Yeah, that average cost is a weighted average. We got to figure it out. But we use just the totals, the goods available for sale. It used to be QuickBooks only did average cost. They wouldn't do LIFO or FIFO. So I don't know if that's changed since. All good questions. Anything else on your mind? I shut up long enough. I'll get another question. I really, really will. But if not, I also, my door's open. If you have any questions, the exam opens, it'll be Thursday morning. We'll start the exam, so.
How much of the exam's gonna be on just like key terms wise, like how much of it is gonna be in there?
Not so much vocabulary, although like I said, you want to understand lower of cost or market, concepts like internal controls, the cash and cash equivalents may be a good definition to be aware of. As I said, vouchers, multi-step income statement, preparing balance sheet, classified balance sheet and multi-step income statement, bank recs. That should cover most of what we need.
And all those are in like those little quizzes or whatever, like everything we're gonna need.
They're not all in the multiple choice quizzes in the chapters. I'm not, I'd be too easy to say, yeah, just do those multiple choice quizzes and that's all my questions. Nope, no such luck. But everything is on the exam is in the book, and it's nothing that you couldn't ultimately make sense of when you were reading through and doing the examples, doing the problems. So
Okay.
I want, so I'd like to say, yeah, it's 5 question quizzes. You do 4 of those and you're good to go. That's not quite the case.
Right, I got one more. I had closing accounts was not in the study guide, but I think it was in one of these chapters.
Look,
Like
closing
closing
accounts,
period.
closing entries.
Yeah, closing
So it's
entries was
something
that.
called the income summary. Does that ring a bell?
Yeah,
Um,
and like the
what we
order of those steps, was that in this content or was that, and I just wrong
Yeah,
number?
but bottom line, those closing entries, there's temporary accounts and permanent accounts. And the temporary accounts are which statements that are going to go to zero?
Accounts receivable.
Well, will receivables go to zero at the end of the year? Will cash go to zero? Inventory
No.
go to
Or like
zero?
sales and expenses,
Sales
or
and
like revenue
expenses.
and
So the income
expenses.
statement will be zeroed out.
Uh,
Okay. So you're going to take your revenue, which is a credit balance, you debit the revenue and credit income summary, and then you're going to debit income summary and credit retained earnings. So that retained earnings goes up. That's the closing entries that I don't really do. I don't really test on. So as soon as I say that, people say, "Good, I don't have to hear about it." But to clarify, that is part of the cycle because you're going through the
Right,
cycle, the trial balance, adjusting entries, adjusted trial balance. Then when you do closing entries to zero out the income statement, to that income summary, you're just left with a balance sheet, your permanent accounts. Because, yep, receivables don't go to zero. People still owe you money. Unless you sold everything, inventory is not going to zero. Cash doesn't go to zero, God willing. So none of that stuff is zeroing out. Revenues go to zero. You start with a clean slate.
right.
Expenses go to zero. Again, a clean slate. So those are temporary accounts. And those are cleared out at the end of the year. And that's where those closing entries come in. I'm not too worried about closing entries because you'll end up, if you're not an accountant, you'll never do them. And even if you are an accountant, you still may never do them because the computers do it for you. But understanding the concept is kind of important. Just
Yep, that
knowing they're
makes
going to
sense.
zero out. Great question. I told you if I waited long enough, get another question. Thank you, Jackie. Any good news today? Anybody have anything they want to share? Other than the exam's not till Thursday, so that's all, could be good news.
Got my taxes filed. That's my good news.
Outstanding.
I'm gonna be an
Actually,
auntie.
What's that?
I'm gonna be an auntie.
Oh,
Congratulations. Sweet.
that's way
First.
better than taxes.
Yeah, it is. I don't know, it depends how much the refund does, but yeah.
Yeah.
Yeah, wonderful. Do you know if it's a boy or girl yet?
Don't know yet.
Okay. That's exciting. Change.
Pretty
I found out I
excited.
need, yeah. I found out I need a root canal today, the first in my life. So that's not get to go to Grand Rapids in a week and a half. No, that's not the good news. This is good news. I'm alive to enjoy it. Appreciate the day, the week, the month, the year. Well, thank you for your extra efforts. I'm actually I'm recording this, so I will post it and make it available. I hope your classmates will appreciate you as well. So congratulations on being here and investing the time. I hope we find it worthwhile, and I look forward to seeing outstanding results on the exam. Anything else for parting words?
Thank you for your
Yeah.
time.
Yeah, thank you. I appreciate it.
Very welcome. Have a great night. I
Thanks.
get to see some of you tomorrow.
You too.
You're very welcome. Take care.
Oh, actually, tomorrow, do I need to print out like my slides?
Yes, please. Yeah, it
Okay.
could be 4 to a page or 6 to a page, but print out before presenting.
Okay, yeah,
So I
because
guess
yeah, okay, yeah, I'll be awake because I got to do some stuff at the frat house at like 5 a.m. So I'll be awake. I'll go to the library or whatever and do it. So
thank you. Appreciate it, Logan. You have a good one.
yeah, thank you, you too. Bye.